everyone who's joining our catch-up today. My name is Sam Cust. I'm one of the directors here at Hyper, and we have Ash Brown, the CEO and founder of Empiraa, which is super exciting to have you on
CEO still sounds funny.
Today's catch-up, some of you would well know from the advertisement, is about how Ash has come on this journey to raise as close to around $700,000 for his startup Empiraa, a pre-minimum viable product, which is a super achievement off the back of our Hyper Accelerate program. Ash and I were just having a conversation before, and we're saying today's catch-up is not about trying to sit here and talk about how good the product is and whatnot, but it's really about trying to give back and help other emerging founders on that journey, going through from their idea stage to getting funding and to launch into the market as safely and successfully as possible. Now, we're going to kick off today asking Ash, though, to talk a little bit about his journey today. Tell us a bit about Empiraa and how it came about, and then we'll go through from there and kick off.
Yeah, beautiful. Well, probably I'll start, I started sweeping floors at Harvey. No, I won't go that far back. No, Empiraa is basically a short version of really a simple to use strategy platform. I've worked at a C level, national sales manager, head of sales, GM, and that type of stuff in really good businesses. And they had the same problem in every business. And it was literally that we talk strategy. We all wanted to do strategy, but we never really executed it. And it wasn't really the fault of the business. It was more of this, it just wasn't in the coalface. And things changed in the world in the last sort of 10 years where the accessibility to SaaS products like Salesforce, Xero, Zoho, Safety Culture, these really helped form form products that we used to need to get a consultant into your business to actually use. And I was a really early adopter in sort of the CRM technology and with a couple of products. And the more I kept running into the businesses, and I was at one business for 10 years and it was fantastic. Then I went to another one, which was a hell of a lot smaller, to sort of get that startup vibe. That's how we met. And then went to another one, which is sort of a medium one. And it was the same problem everywhere. Like we all wanted to do strategy, but we got a PowerPoint presentation or an Excel spreadsheet, or we were given these unbelievably long MBA like words and jargon, and you sit there and go, it's not how people talk, and it's not people how, it's not a competition to see who can use the biggest words. So I'm like, let's go out and build a product that actually helps the everyman and woman to actually create a strategy and design a strategy for themselves and engage their team.
Yeah, and that's probably the biggest thing, Ash, when you first contacted me around this idea, is knowing you, luckily enough before that, is that you had a real deep passion to help and solve that problem. And I think that leading into when we talk about the investor side really rings true throughout that, continual dialogue of what you are trying to achieve here, from that help of that journey, and especially solve that problem that all SMEs and medium and even corporates fail in terms of executing strategy on a daily basis. So just in a quick nutshell, what is the product and kind of where are you at now with it as well, before we kick off into understanding your journey from there?
So the product is, it's called Empiraa. It's a strategy SaaS. Basically, it's built out in a way where you can design your own strategy, roll it out, and engage and collaborate within your teams. It gives different levels of your business, different levels of visibility. And what I mean by that is, if you're an owner of a business, you can actually see how your business is executing your strategy. And if you're at the sort of I hate to use the term bottom of the org chart, which is terrible, but if you're at the coalface and executing your objectives, you're also showing the people that are above, hey, I'm successful. I'm doing quite well here. I'm actually and I'm contributing to the team's success. And it's really about it's a collaboration tool at its heart. The best sporting teams, we're both sporting nuts. The best sporting teams play off the same playbook. The worst sporting teams, they've got no idea. The backs don't know what the forwards are doing. The midfield's kicking God knows where, because it's all everyone's gone into business for themselves. But if you want to be Hawthorn of the 2000s, or Brisbane Lions of the 2000s, everyone was a star in their role. So we want to create stars in their roles within businesses.
Yeah, wonderful. No, that's great.
And give the SMEs the opportunity. I said before, why can't the shop around the corner have the same opportunity that the larger corporation can with their strategy?
Yeah, wonderful. And I guess, when did you feel that you had that light bulb moment where you felt confident enough to say, I've put together this package of what I know Empiraa is, where our business is going, that you're like, great, I'm going to go start and actually talk to potential investors?
About 3 minutes now. No, in all honesty, I called you.
Yeah.
I actually go back one step. I was working with a mentor of mine, a great mate of mine, Bruce Foraker, and we were working together trying to, like, this is after I left, and we were working on trying to get me to be a business strategist and a sales strategist. And it was good, but the problem was it was starting to become a really flooded market, number one. And number two, I was the product, and how do I duplicate it myself? Which, anyone that knows me, you don't want to clone me. So so how do I do that? And I was just sitting there, I couldn't unlock it. And then it was actually Canva, when Canva, it's 2-3 years ago, and they got this, I didn't even know what Canva was, but I saw what they did to design and how they really changed design from being, you had to go do 4 years of, and then learn how to use Adobe and all that sort of stuff. And I thought, hang on a minute, this actually sort of makes sense. And then I rang you and said, Sam, I've got this bonkers idea, and you've started with Hyper, I think, not long before that, and said, hey, what do you reckon? And sat down and we started plotting out the map of where we're going to go. So that was sort of how that sort of come about.
Yeah, I guess it was taking that idea and thinking, how can we actually scale it out? And that's why that SaaS platform obviously came into fruition, which is wonderful. So taking aside the product and what most are here today to really kind of understand is that journey that you went on from an investment point of view. If I kick that off to begin with, without as little as profanities as possible, but I guess, what's the emotional roller coaster been since finishing our program and having the tools and assets in order to actually go and secure that funding to allow you to go close to launching?
Yeah, I won't drop too many F-bombs. It is an absolute roller coaster. I did 20 years of sales, obviously, before I started this. And I thought I was good at sales. And I thought, oh yeah, I've got this is easy. Let's go talk to people. It is so hard to talk to people about angel investors in particular. Talk to them about something that you're extraordinarily passionate about without getting lost in that passion. And sometimes when you get lost in that passion, what will happen is it'll take you on different pathways. And so what will happen is you'll have a conversation, and there's one in particular I had that was all over the shop. I was talking about how I wanted to be a CRM of this, and I wanted to do this. And you sit there and you go, and in hindsight, you go, what in God's name have you actually jumped in and saved it, thank God. But that was a light bulb moment for me, where I was like, hang on a minute, you've got to actually get your storytelling right, get succinct, understand what the product is. And it's really hard to understand what your product is at a very early stage, because you sort of, at that point, after sort of working with yourselves, you've got a pitch deck and a prototype. You've got a rough idea what the product is. But that does evolve from being on that pitch deck to sort of development, which is, we're launching in the next couple of months. But when you don't have that, then it's not siloed.
Yeah, for sure.
And when it's not siloed, you get a bit of creative freedom, and you start just blurting out every idea you've ever had. And investors don't want to hear every idea that you've ever had. They want to hear, well, why are we going to give you X?
And it's a really interesting point you make. And I think it's like any environment, but especially early on, when you are going and speaking to people for the first time, no matter what level of investor they are, whether it's a venture capital, angel investor, your friends and family, or ex-work colleagues, or whoever that may be. But that element of vulnerability, to put yourself out there, I guess, was there any kind of advice that you would give in terms of, you learned from bad pitches, you've learned from good pitches, but I'm sure those bad pitches made those good pitches.
Oh, God, sometimes I sit there and go, Jesus, what a joke I was. And that was like 2 years ago or whatever it was. The two, I've said this to you, and I've said it to a few people, the two superpowers that you have as a founder of any business is vulnerability and curiosity. Tap into your vulnerable side and actually admit to your investor, I don't know what I'm doing here. Don't walk up and say, look, I don't know what I'm doing. Can you give me 10 grand?
Yeah.
But it's like, I've got a skill set. I've got a passion towards this. I don't have a skill set here, and here. But I'm smart enough to realize that if I ask the right people, curiosity, that I can actually engage them a part of the problem and bring them along the journey.
Yeah.
And what I think a lot of people get lost in is they go, oh, money. It's all about money. It's actually not. High net worth people or people who want to invest, yes, the money's there. There's no doubt there. But if you want money, just go. In all honesty, you want money, go apply for credit cards. Yeah. And just pay 20% rate on it. Go get 100 grand worth of credit cards and start your business. But if you actually want people can actually go out there, I'm not saying do that. But if you want to actually have people give you more than money, expertise, advocacy, shoulders to cry on, people that actually can really engage you on a level that's far beyond money. You've got to break down that walls and actually admit the things that you're not good at.
Wonderful.
I'm not great at detail, I'm not great at this, I'm not great at that. But I've got people around me now that are extraordinarily at that. Just extraordinarily good at that.
So touching on that, Ash, which is super interesting, is Ash being a solo founder, beginning his journey. So in those very early days when you were looking to raise your first pre-seed amount, not only, as you said, looking for cash on capital to bring into the business, but was there something else that you looked for in people, and did you actually provide them with an opportunity to be a part of more than just providing capital that really helped you in that early stage?
One of the things that I learned, the power of no. Just because someone's got money doesn't mean you should just take it. Mafia makes a lot of money by lending people money at high interest rates. You don't take that money. But what I learned was that, is this person someone that I actually want involved in the business long term? Because you've always got to sit there and think about it long term. So I sat there and I really thought about, okay, what do I need? I need someone who's got strong financial sense. Got one of those. You'll need someone who's got strong, understands, who's done it before, but also knows the customer experience. Got one of those. Got someone that complements my skill sets. So once again, you got to sort of look back at it and you got to look at the sort of lay of the land. And once again, the sporting term. If you're looking at a basketball team, if you've got a team full of guards, you're never going to get a rebound. And you scored against. But if you've got a team full of centers, so how do you get that balance? I think straight away, I really believe that when you start clicking with the people and actually understanding it, and then they're bringing you and asking you questions, that's what you want. But it's really hard. This is not an easy thing, and people sit there and go, oh, how do you do it? Look, obviously this is what we're doing, but don't think it's a layup. Don't think it's just easy to turn around and say, hey, blah, blah, blah. This is a grind.
For sure. So in saying that, with that early days, what I'm understanding, I know that there was a method to your madness. A lot of people think, great, I've got an idea, I'm just going to shoot out as many pitch decks and just try and hope into the wind. But what you're looking at there is actually identifying behind this capital people, and these people can actually go on a journey and be involved. So how did you kind of, I guess, go through to identify who those people were and go through that pathway?
I actually used someone like yourself, to be honest. You had a really deep network, and I had other networks as well, but you were actually able to open up some networks for, and this is not blowing smoke, but it's legitimately that actually helped. That was probably the biggest thing, and to sit down and identify the people that you actually want involved. Now, not everyone wants to. We've got investors that literally can barely get on the phone, and there's nothing against them. They want to just pay the money. They see a good investment. They're off. They're fine. They'll get their return in 5 years, and they'll be happy. But then there's others that really want to roll the sleeves up. There's one in particular, especially earlier rounds. He's been, I'm not going to drop names just in case, but he knows who he is, and he's been absolutely fantastic. Just rolls the sleeves up whenever I need, and he's also my level head in a lot of regards. How you find them is just, it sounds ridiculous, but they've just got to be attracted to your passion, and they've got to know that. And they've got to identify with the problem. And that's the key. They've got to identify with what are you trying to achieve.
Yeah.
And if they can identify and they can go, actually, yeah, I've dealt with that.
Yeah.
Actually, I'd like to be part of that solution.
Yeah.
And that's where you've got to sort of tell that story. Hey,
yeah.
This is a problem. Hey, let's sort this out together.
Yeah. And that's a super powerful thing that you mentioned. I know from, my reading experience, I can't remember the exact person, but, just understanding that as a founder, you have to be in love with the problem, not in love with the solution. And I think that, and I know for you, Ash, as well, and many other passionate founders, when you're in love with the problem, it is really infectious to those around you that want to solve that problem with you as well.
Oh, it's the reason why we get up in the morning. It's the reason why we're doing what we're doing. It's the reason why we're spending hundreds of thousands of dollars into the product. It's not because we're sitting there in love with the result. That's ridiculous. That will come. We're in love with solving the problem because we solved the problem. That's greater than anything you could possibly do. Missionaries versus mercenaries. Find yourself missionaries. Find yourself, because the mercenary, and this is why we knocked a couple back early. You've got to be truthful. You can't sit there to an investor and turn around and go, hey, can I 50 grand? Yeah, no worries, whatever percent, and turn around and say, oh, by the way, we'll give you dividends within 12 months. Because you're lying. Do you know what I mean? And that person, all you're doing is offsetting anger. Where if you actually say, look, you want to come on the journey, that missionary thing is super, super, super important.
And going back to, I guess, storytelling as well, one of the questions that was asked from the audience prior to this chat was, how were you able to raise this significant amount with actually not having a product, but actually selling a vision of where you are going as well, and where you want the product to go?
I think the passion. And once I figured out once I got my story succinct. That was a huge thing, right? Because when you're sitting there and you're all over the shop, no one's the best. I've watched enough Dragons Den and Shark Tank to understand that. But I think once you get that story down pat and you sell that passion of what you're trying to do, and it's not a fake passion, you've got to want to do this. If you're just doing it to get a headline on the AFR or whatever like that, and you just want to sit there and have founder on your LinkedIn, don't bother, man. In all honesty, don't bother. This is a purpose-driven industry, and any business should be purpose-driven. So find that purpose and then bring the people, and you'll find those people will come along for the ride.
And understanding as well from your position of when you were going, for those initial investors as well, I started to see a pattern of a web almost forming. So, a lot of your investors in the early days actually came from other investors who invested in their telling their friends as well, and it kind of started to open up there. Exactly. So keen to hear a bit about how that evolved as well.
So a lot of our investors, especially like I'll say the last round. So we've done 2 rounds. The first round was pre-seed. Those guys and girls were awesome because that was literally just a pitch deck and me grinding it out and having 1,000.
And believing in you.
And it's in the middle of COVID, so you're not really doing proper meetings. And so the fact that we were able to raise, I think, 110 grand in that regard, and literally we had a prototype which Hyper built and a pitch deck which changed about 800 times, and they bought into what I was trying to solve. But then the next round, there was actually good, because what happened is there was actually investors from the first round that actually brought people on, but then there was also people that I spoke to initially in the first round. They're like, and by the way, I completely agree. Because some people, this is one thing that a lot of founders are going to understand. Don't look at it from your point of view. Look at it from 2 sides of the coin. Would you invest in you? And everyone goes, oh, of course I would. Well, no, that's a lie. Would you invest in that same person if they had the same problem? And like, oh, well, actually, I'll wait for the next round and see what other people, because there is a web effect or a FOMO effect. So what happened was we did actually get quite a bit of investment, which is probably a third of investment, if not more, from the one particular investor in particular whose spiderweb
introduced it.
And it's like, man, and then this is what I was talking about, getting advocates for your business, getting the right people who've got the passion, because they'll advocate for you. Because I've got 3 investors in the last round I've never met.
Interesting.
Never met. Spoke to on email and various other things.
They trust you through that initial investor. Who obviously wanted to bring them on board.
So find an advocate, find advocates for you, and for the problem. And that's not easy. You can't just go, advocates are us. And it's like an advocate just come for you. But you've got to find the right thing, and just go back to the authenticity of being vulnerable and being able to sort of really be curious about the problem.
Now, before we touch on the VC element, which we'll go through in a moment, what I wanted to chat about as well is some advice around the process of raising investment. I think that, there is an element of ease that came with it for you due to the fact that you have a sales background. So in the element of pipelining, but I guess, what advice would you give to someone who, I guess, has just finished up, say, our Accelerate program, or was just at the very beginning of going through that investment journey in the early stage, to actually go through some, maybe some methodical steps in order to raise that initial round?
The great poet Joel Embiid once said, "Trust the process." You've got to have a process. I saw actually Cake recently did a webinar on it, about having a process and setting up spreadsheets or a CRM. You've got to treat this as serious as possible. Once again, be on both sides of the coin. If you're asking someone for $10, $15, $20, $50,000, you've got to get to a lot of people to get to that point. So you've got to have a process. So you've got to identify people that there's plenty of resources through Airtree, Angels and startups. There's heaps of Victoria Startup New South Wales. Going to their databases and actually find these people. And see what they've done, see what they've invested in. It's a really important thing, especially like I'm saying from a person that doesn't have a network. Right. So you're dual blob and you're working and you're just trying to launch a business. And you don't know Arthur from Martha. Go through and spend the time, do the work. Treat it with the respect that it's deserved. And I think a lot of people I shouldn't say a lot of people. What people don't realise is there's a certain level of respect you've got to give to this thing. People aren't just going to cut you checks for $10, $15, $20,000. That's not, someone looked at mine and said, "Can I have 20 grand?" Go away. I barely do Halloween trick or treat, but it's like, so you need to treat that with respect. So what you got to do is sit down, plan out what you want to do, who you want to speak to, how much you want to raise, what you actually need the money for. You want to raise 100 grand. Okay, what are you using that 100 grand for? Guess what? You get asked that question. You want 100 grand. Hey, what are you using that for? And it could be just things like establishment costs. I want to be able to invest in accelerator programs. I want to invest in a little bit of marketing. I want to do some R&D work on the product before we actually go into the next round to pay for it. Because not everyone's got the money to go and spend $400,000 on a build. So really build out a pipe. There's Pipedrive, there's Zoho, there's HubSpot. There's so many different CRMs out there.
An Excel spreadsheet.
Excel, Google Docs. Like these are all these resources, and they've all got freemiums. So really, that's what I'd be.
Wonderful. I've read a really good analogy. I think it was the Cake guys. Shout out to Jason and the team. But essentially, that strategy when you are talking with investors, it's not a dot process, it's a line. You're taking them on a journey, and people decide to hop on at the very beginning, and some decide to go on in time. But just because they don't get on at the point at the station here, they may still hear. So you want to take them on that journey throughout that evolution.
Well, we had some that I spoke to at the start, and wanted to see how it went, and they knew that they weren't going to get the same value of thing, but they were not risk adverse, but they wanted to see if I had to stay. And that's actually something that one of the investors who's now director of Empiraa, he said, he goes, "I invested in you because I knew that you had the ability to persevere when the times got really tough."
That's wonderful.
Because that's and how you do that is just through your storytelling, through your passion, through your authenticity. If you're sitting there doing this honestly because you read the Cam's worth 55 billion. I think I used the analogy yesterday. That's like an actor going on, trying to get a gig on Neighbours and then wanting to be Brad Pitt. There's only a couple of Brad Pitts. There's only a couple of Angelina Jolies. There's only a couple of. You can make a really good career. And you can build a really good product, but don't sit there and worry about the end result. Saying, I'm going to be a unicorn, or I'm going to be worth billions. Just focus on this. And to be honest, I'm only just got to the line. You know what I mean? We haven't even launched yet. But we've got to the line,
Yeah.
and that's a win in itself.
Yeah, no, exactly. And Ash, I think that's, a wonderful way to obviously put it, is that, don't get distracted by the headlights and the media and what's out there, because I can tell you every single one of those amazing founders who's gone to have that success has been more obsessed about solving the problem and focusing on that and building out great team and great people, and the rest is a follow-on effect of what's come from that.
Yeah, you have to go back to the problem. And focus on the problem.
Yeah.
And how you're going to fix it, and what's your solution, and why your solution is different to the solutions that are currently out there. And by the way, you can come up with a product that's already out there.
Yeah.
That's not a problem. There's Coke, there's Pepsi, there's Schweppes. Like, you can actually do that. It's just what's your spin on that problem.
Exactly.
And how are you going to be able to tackle that problem differently from other people?
Yeah, for sure. Now, going back to the emotional journey of this process, which is very real for everyone that is listening, and anyone that's hopefully going to embark on that journey, understanding as well that, you are a person, you are the lifeblood of this business. Hearing a no or hearing negative feedback, I guess kissing a few frogs before you have a prince, or the saying goes. What is that feeling like when you are in this, vulnerable state of trying something new? You are, essentially asking for money, etc., to get that knockback, but I guess that mental energy to persevere to the next person. You ask people.
Are you passionate about the problem?
Yeah.
If you're passionate about the problem, you don't give two craps.
Yeah.
You just got to go, okay, cool, that person doesn't get it.
Yeah.
That's fine. We got plenty of knockbacks. And we'll discuss the VC stuff.
Yeah.
I've got knockbacks from. I got knocked back from one because I had a spelling mistake in the pitch deck.
Yeah.
That's not the right person for us at the end of the day, because I'm not a detail oriented person. It's just not in my nature. It's never. People have tried, by God, have they tried to get me back, but I got knocked back on that. I mean, sit there and that cost $50,000.
Yeah.
But I believe in the thing. We end up getting it back in kind with others.
Yeah.
So if you lose $50,000, that's probably a really good example. You lose $50,000 off of the seed round, because you spelt two things wrong on a pitch deck. That person wasn't meant for you.
Yeah.
Don't sit there and obsess over, we've lost $50,000.
Yeah.
Are you in love with the process?
Yeah.
Move on, keep going. And it's hard because you're so passionate about it, and you've got so much. I used the term the other day to someone. It's not sweat equity; it's soul equity. Yeah. And because people say, you got sweat equity. No, it's soul equity, because you are literally pouring everything you can into this. And if you're not willing to treat it like an 18-hour day, then just don't bother.
Yeah. No, that's really good insight, Ash. I think that, that's like anything in life. You've got to be resilient and understand that, there are people out there that believe in what you believe. Yeah. And you just got to find those people. And it might take 10 conversations. It might take 100 conversations. You've got to keep that resilience in order to have those.
Canva got knocked back by over 100 VCs.
Yeah. And
that's all you need to know.
Airbnb, same.
They're being knocked back by hundreds of VCs, and now the founder of Canva's calling out the VCs now after he's got all that money. Good on him. But you know what I mean? I agree. Like, you're going to get knocked back. Yeah. You're not going to bat 100. Yeah.
So talking about your venture capital journey here in Australia, and also with international VCs, I'd love to hear around, I guess, your mindset going in to your venture capital, I guess, process to look to raise that second seed round, the journey there, and then I guess a lot of the learnings that you've taken from there, and we'll go from.
My mindset initially, we've raised $100,000. This is going to be a piece of piss. Got a good pitch deck. We can, better term, we'll shit this in. We'll get the money that we're going to get. And it was crickets. And then you sit there and go, holy crap. But then we met with VCs and we met with, I think, half a dozen. And the good thing about it was the feedback that we got was excellent. The feedback we got was, have you thought about this? Have you thought about becoming a product leader? Have you thought about the metrics? Have you thought? And it's like, holy crap, these guys are like next level thinkers. Fantastic. And a lot of them, to be fair, wanted to actually say, get the product. And we didn't have a product, by the way. So we're doing this off the pitch deck. We've got a few we've got people on our board and some really, high level advisors. And it was an exercise in humility and how to pivot would be the best way to put it. We were too early, but we shot our shot. And by the way, that's not a bad thing. Shoot your shot. Because you're not going to sit there and you die wondering.
Yeah.
I've said it 1,000 times. People who are inside of Empiraa, we don't lack ambition.
Yeah. Yeah.
So we just got to keep having a crack. But yeah, it was interesting. It was actually really good. Some were really excellent. Say what the square peg guy, Jeffro, was fantastic.
Yeah,
he was absolutely brilliant. He really thought through the problem. Some were probably a bit more like transactional, and I understand that too.
Of course.
But the difference was that I found that the VCs didn't identify with the problem as much because it just probably wasn't. They weren't in it.
Yeah. And
they didn't have the actual platform to look at, and there was no metrics there. So I understand that. So if I'm looking at, this is what we're talking about with two sides of the coin.
Yeah.
I look at it from my side, go, why wouldn't you invest? And then you get this bang cracking, like, oh, that's why you wouldn't invest. That makes sense.
Yeah.
And so you sit there and go, oh, we've actually got to get a product going. We've actually got to get some metrics, we've got to get some people thing up. So then we pivoted really quickly.
Yeah.
And went, all right, how do we get sort of high level investors? And once we did that, it unlocked really quickly, and that's where we raised the bulk of the 670.
Yeah,
pretty quickly. We got a couple of really good investors that wanted to put significant money in, and they could see the how we could fix the problem.
Yeah, and I was fortunate enough to be privy to majority of those venture capital conversations. And I think that, the mindset that you did go in with initially, and the first few was probably more, okay, this is a business meeting, it's, almost like a selling meeting, etc. And then as over time, we understood that taking it really as a learning opportunity. VCs are a wonderful resource in your early days, even if they don't, supply you with, capital at the beginning. They sit across multiple businesses, per day, per annum, per year, and they see what has actually made and be the success metrics. So asking, I guess, the right questions, doing your homework before you actually sit down with them. Every single VC has a different mandate. Some are interested in different sectors, some are different by, product-led companies, SaaS platforms, etc. So really taking the opportunity as VC is a great way to actually learn a lot more about yourself and your product in those early days.
Well, I looked at it as a marketing exercise.
Yeah.
I looked at it and went, well, this is our way of flying the flag and say, hey, we're here, we're Empiraa, we're going to do some stuff. We got great feedback from pretty much. We actually got really good feedback, and it was actually really interesting. Just a different point of view, because you think you're doing everything right. You think, oh yeah, well, we're killing it, all right. And like, if you thought about this, you thought about this. Like, holy crap! No, I haven't thought about that. I need to change. I need to pivot on that one. And by the way, some of the suggestions they had, I went, no, we don't need to pivot, because this is actually going against our values and the fundamental, the fundamental whole thing that holds the whole platform together. But then there's other ones where you sit there and go, oh yeah, no, that actually makes a lot of sense. Why are we, why do we want sales reps on the road and that sort of stuff? So it was definitely a worthwhile exercise
for sure.
We still talk to some of them now. So
I was going to say the VC avenue is still on the horizon, because obviously they're looking for, once you got into the market, a bit more traction, etc. So a bit of insight to those that are listening as well is what is your process at the moment in keeping them involved and engaged in what you are building along this journey?
This is one thing that I've done. I've actually got a bit better, a lot better at this actually, is build an investor newsletter. Okay. 100%. Yeah. Keep them across what's going on. Okay. They don't have to sit there and engage and go, oh, top stuff, Ash, thumbs up. Yeah. But keep them across what they're doing. They've put money into it. Yeah. And then with some of the VCs that are interested, put them in the investment update. And that's what I've done. I've got Airtree, or I've Scatala, I've got others that are Square, all in this investor update. Yeah. Because passively it's like, oh yeah, I forgot about those guys, and they can by osmosis follow the journey. Yeah. Which is great, which is what you want. Yeah. But that's a really important thing, having that investor update. Yeah. I think that's a powerful tool. Yeah. And I guess going from that journey of VC and then actually going back, as you said, to speaking to high net worth individuals as well, you pivoted your investor pool that you're looking for after that process. And I know, but I'd love to talk a little bit further from
the horse's mouth about, I guess, some of the people that you've probably met over the journey of the last 6 to 8 months, and I guess the insight and the knowledge that they've been able to impart on you to help you through this process.
Yeah, it's you get access to people that are just incredible, incredible thinkers that have done it before, that are really sort of, you go, oh, Jesus, and I didn't think about that. And then, and one of the things that I'll say is that we've done quite well is we've been able to put together a sort of an advisory board and have advisors around the platform, and by doing that, we've been able to bring in people that are actually want to be part of that. So this is what we're talking about before, like you're bringing investors. Some of these investors actually want to get hands-on, but they don't want to get too hands-on because they've got, real world jobs, families, lives now. But a couple of hours a month, they can come in and actually have some sort of say in their investment, but also offer their advice. And you sit there and go, oh yeah, I never thought of it like that. So once again, be curious and don't think you've got all the answers. There's some things I just want to compromise on, like our values and that sort of stuff, because it's just what we stand for is what we stand for. But when it comes to actually the product and some of the ideas and some of the ways to go about it, leverage off those networks and leverage off the people that are the high net worths, and getting access to them. Honestly, it would come from the first round. In all honesty, once we sort of went to the second round, and the seed round, and turned around and said, we're looking to fundraise. It actually accelerated pretty quickly because those people were privy. And their friends were privy because they were talking at barbecues and the pub or Google meets because we couldn't do proper get-togethers. And they'd be like, I'm on this Empiraa thing, it's actually going well, it's going to launch next few months, and then suddenly FOMO. It's like, hey, I want to get in on this. And one of the things that really helps with high net worths is, at the moment, is you pick up the AFR or Herald Sun, none of the Murdoch paper, but you pick up a paper and you sit there and have a read, then you'll see Dovetails raised 100 million, this is rated 50 million. That stuff has really broken the ice. And the flow-on effect from the Atlesians, the Canvas, the safety cultures, the culture amps, of them breaking the ice and creating people want to get on that. It's a train that they want to get on. There's some probably trains that won't go far, and there's some trains that are going to go across the Nullarbor, but it's really broken the ice there.
Well, I mean, I just reading this morning, I think there was a article from Cut-Through Ventures that in 2021 more capital was raised for startups than between 2018 and 2020 alone, which is super exciting, especially off the back of a pandemic that we thought there was going to be grave economic consequences. But from my point of view, what I see a big shift in is, let's just say, the amateur angel investor has really come to fruition now, that is willing to say give anywhere between 10 to 20 to 30 grand in order to help their friend. They see these success stories that have happened here in Australia now. So one big thing that I see a lot of founders find difficult at the very beginning is believing in themselves enough to actually go and have conversations with friends and families of their own friends and family and people within their network. I guess, what advice would you have around having those conversations with them to really get off the ground early too, knowing that they are willing to invest now?
I understand the person you're speaking to. And know what is their trigger point. Sounds wrong, but what is going to engage that person? And also too, understand that not everyone has the ability to just pull 10 grand out and say, hey, here's 10,000 bucks. So no, but generally what will happen is someone knows someone that's got someone who's got some money. Because we've all got that, Bill, he made a ton of money out of it. Oh, no, be able to give me an introduction to Bill. Bring that person along with it. Be really qualified in how you're doing it, and don't embarrass the person either. So on either side, so don't sit there and ask your mate 50 grand when you know they can barely
of course
pay their electricity bill. But then on the other side too, don't embarrass them when they introduce you to that person. They say, here's my mate Sam. Come and he's got this great idea. be prepared,
Yeah.
do the work, understand, do a bit of research on that person, jump on LinkedIn, jump on their Facebook or Twitter, understand what makes that person tick, and familiarize yourself with them. And by the way, by doing that, it actually shows a level of respect for the conversation for that person. So I'd rather someone come to me, if someone's in the room and me, say, oh, I saw you went to Brownlow College in 1996, like, this person started Teresa, they've gone on LinkedIn and that sort of stuff. Like, all right, cool.
Taking a genuine, approach to caring and understanding, which is great.
Well, you're not taking, we talk about transactions. And it is a transactional thing in some regards. But you don't want to be so transactional like the Tinder swipes. And go, oh, next. And you touched on something before about, what happens with no's. If they say no now, that doesn't mean it's a no later. There's actually a couple of investors that said, at the start, at the pre-seed, but have come in at the seed round. So don't get disheartened by that, and don't sit there and go ostracize and go, I'm not talking to that person every day, screw them. Because that's
there's no point burning any bridges.
Oh God, no.
Now, one question that is pretty exciting to ask, and I know a lot of founders that are listening in are embarking on this journey and being full-time employed. Having a job and a career, having a family, an element of stability, to thinking, shit, I'm now going to start this side hustle and know at some point there's going to be a transition element. And being able to take that stability and jump in the deep end. A couple of questions around this that, I know a lot of people, and there was a lot of questions around this to ask is, how did you go through that transition period? And at what stage did you feel confident to take the leap? And a bit around, the anxiety that was riddled with it as well, to be completely transparent.
I've never had a wife and a girlfriend, but it'd be absolutely that it just having it. It was made out to be. It's hard to ride two horses with one ass. And the hard part is you're naturally drawn to the thing that you're most passionate about. But the thing that you're most passionate about is not putting money in the bank and paying the bills. So you've got to sort of really pull yourself back and actually respect your workplace that you currently. I was lucky, and I was pretty open and honest with my workplace. And so I just had to work harder than I've ever worked before. I just had to do the work. I just had to just roll the sleeve up and just go, I've got to be the hardest worker in the room for the first time in my life. But I had to be because I didn't want to give them my business deals. And I was a general manager at that point, so it wasn't like it was an easy role. I had to make sure that I was giving them the respect that they deserved, but then outside of that, doing the work. And meeting after hours, meeting on weekends, meeting people at lunchtime, coffee chats, that type of stuff. So it's very, very hard, and it is very, it is an anxious time in your life because you're investing a lot into yourself and to this idea. But you don't know if it's going to actually generate anything. So it is risky. It's a huge risky venture. And it might not go anywhere. And that's a risk.
But just to flip that as well, I mean, that moment when you were able to actually have the stability and the mind to say, great, I'm actually going to be doing my own thing now, running my own.
Oh, that's terrific.
Run us through the emotion of that and that feeling of, I guess, self-fulfilling purpose of going on your own journey.
I've always wanted to work for myself. I'm a horrible employee. Just horrible. Anyone's word, because I question things. I want to do things differently. I'm a disruptor. I was successful in my roles, but I was a horrible employee. I'm not gonna lie. Because I wanted to sit in the driver's seat. And there was a lack of patience in that. So when I finally got the opportunity to do my own thing, it's like, okay, Ash, you sat there and criticize and question things for 15, 20 years. Now's the time to basically put up or shut up. And you can go two ways with that. You can actually go, oh, Jesus. Or you just, what's the old saying, the moment makes the man effectively. And I haven't done, I've done it for 3 or 4 months now. We haven't even launched yet. So in some regards, it's a bit easier. Because it's sort of working towards a development. Ask me in 12 months' time when we potentially got 10 employees and dealing with the day-to-day runnings of the business is going to be running over a couple of continents. I'll probably have a completely different answer.
Yeah.
But right now, it's awesome. It's great to work with purpose. You wake up and
do you feel like you're working?
No, you really don't.
Yeah.
And there's almost a little bit of a guilt there.
Yeah.
There's almost a little bit, I get paid to do this that I actually love. And but it's good to do something that makes you smile and it gives you energy. So you've just got to keep that energy rolling and just remember I said it to my wife the other day. I said, my worst day, if I've had a bad day here, which I haven't, it'd be my best day elsewhere.
Okay, that's a great way to put it.
So you've just got to you've got to have that real sort of perspective.
Yeah.
Because everyone wants to work for, like, realistically, like you've got, Bill Jones that works in a factory.
Yeah.
He wants to work for himself. Like, or everyone wants to be their own boss. It's a dream. I don't look at my own boss because I'm not, because I report to my investors, my shareholders. That I'm actually a caretaker of the business. That's my role, is to make sure that the business rolls and it rolls on and it's profitable and it's put in a position to succeed. So that's a whole different set of pressure. Yeah. Especially when you're dealing with people's life savings. Yeah. And you've got to respect that. And I think that's the other side of it too. Respect. When someone gives you a check, whether it's $1 or it's $100,000, respect the fact that that person has saved, and regardless of what their net worth is, or whatever, that person is entrusting you to look after their money, invest that money. So don't go out and buy ping pong tables and arcade machines and $2,000 coffee machines. Sit there and think about it as it's your money. And if you put that money in, would you waste it on that?
That's great advice. Now, Ash, with as well providing some really good tips and understanding through this process. One thing that we were speaking earlier on was around branding. And I guess as yourself as a personal brand and as well as a business, I guess what level of importance and how has that played throughout the journey as well?
Personal brand, I still don't get my head around that one. I'm still an idiot from Aubrey in my eyes. But obviously some people invested in me, so just be authentic. At the end of the day, just don't try to be something you're not. That's the try to keep your nose reasonably clean and try to, all I think Bruce, who's my mentor, basically said, you just treat people how you want to be treated. Same thing in life, just treat people how you want to be treated. And trust me, I was a shithead at one point, and I was probably a pain in the ass to work with, a pain in the ass to be around. But I think you just grow up and you just turn around and go, well, actually, it's not causing myself. So once you turn yourself around in that regard, and you just invest in yourself.
Well, the biggest thing that I really take out of that, Ash, and I know you as well, is that people think, I have to be the Zuckerbergs of the world that have gone to Stanford in college and sat there, and that's how I want to build my tech company. Whereas we have this wonderful, I guess, awakening of the entrepreneur environment here in Australia, where anyone that has the ability to be transparent, honest, be passionate, believe in their problem, has the ability now to start their own business and at least give it a crack.
But be authentic. I keep using the authentic thing. And like at the end of the day, and I said this to you before we started, all we've done is raise money to start development. We don't have a product out there just yet. A couple of months, definitely. We've got a really strong plan, strong team, all this sort of stuff. And it still freaks me out sometimes. People look at themselves. Oh, geez, you've been successful getting to that point. And I was talking to someone the other day, and I said, everyone's always like aspiring to be someone else. And we're never actually happy with who we're at. So for me, it's like, all right, cool. It's great that people are looking at, people, X amount of people wanting to watch this to see how we got to this. But I want to get to the next stage. So I'm constantly looking forward. But regarding the branding, so so be humble about the whole damn thing. Like my head still spins that people actually want to listen to me talk about this crap. But regarding branding, the business branding, that's super important. That was one thing I did learn in my previous role at Taxi Box. They've got an extraordinary brand. They really do. It's fantastic. And Ben the founder there, has spent years maintaining and being militant about his brand. And I really took that in. I was like, this guy gets it in that regard. So branding, identify your brand early days and what you are, what you stand for. And don't compromise on it. And the same with your branding, like your logos and that type. So invest in that, obviously, because there's a small little detail. We got feedback from a particular VC that actually said, you've got this great attention to detail, not me, but the business itself has a great attention to detail, design and that type of stuff. So you want to make sure that you feel you're not writing stuff on, with Comic Sans on a Word document saying we has money. You want to really focus on getting that brand right. So spend the time getting that right. Use the same colours, same fonts. Just continue to reiterate that brand. And
before we go on to some questions that I've seen light up, which is great. One thing I wanted to ask is, you've raised this, pre-seed seed round before the MVP gets launched. From an investment point of view, what are the metrics that you want to get to and achieve? And I guess, what does that look like for you to then grow at further scale now that you've got to this stage? What's that next journey?
I'll straight up. We want to launch by the middle of the year. We're going to offer a significant freemium version as well as a very incredibly valued pro version. Which we'll release in due course. Which I think is going to help a lot of businesses. For that, we want to get to, and I'm straight up and people say I'm bonkers, but whatever, people said I'm bonkers. I want to get to 50K MRR by the end of the year.
Yeah, wonderful.
And people say, oh, you know, 50K, I want to get to 50K MRR. And I'd love for the business to have a sort of a $20 to $30 million valuation within 12 months. And people said, oh, you're crazy. If you don't aim high, you're not gonna achieve it. So I was like, well, let's do it. So we're trying to put everything we possibly can to get that. We've built. You're seeing the product. It's actually extraordinarily the partners that we've actually got to develop it. Incredible. We've got really strong go-to-market strategies. We're going to have aggressive pricing. We're going to be very, very out there.
And I think that's great. You've obviously got these key metrics that you want to hit in order to help hit those goals that can secure later on funding, but bring it right back to just focusing every day on that problem and the product and everything's around that, and talking to the customers as well. Now, this is one thing we didn't mention earlier as well, but it really helped in your ability to raise funding too, was actually getting that EAP in a group of customers.
Definitely. The early adopters program was a terrific idea. Rod, who's our chairman of the advisory board, come up with it. Me and him sitting as the Maori chief in Port Melbourne, had a beer and a palmer and sat there, and we're like, well, how do we get companies on board? And so we've got like 50 odd companies ready to go from day one. So they'll do the soft launch. And the great thing about that is we can actually sit there, and part of that we can sit there and watch them use it and understand how they use it.
So for those for listening as well, so Ash created an early adopters program. So whilst the product was its early stage of actually being built, approached companies and thought, would you guys like to actually sign on to be early access to this and
for free?
So getting that buy-in from potential customer and businesses actually also provided, I guess, investors with confidence in order for them to see that once this goes live, that they're actually going to have people that do want to pay and use the platform.
It's an identifiable problem. At the end of the day, we've all sat in a room and gone, geez, it'd be good if we had a strategy. It'd be good if we knew what was going on. And there's always you walk through any business and you listen to people go, why are we doing what we're doing? And if they don't know why they're doing what they're doing, how do you expect them to execute it? So, geez, Sam, we've got some questions. Like questions that they just can't tell me to shut up.
No, someone loved the basketball reference. I'll just pick a few here. This is a good question. Thank you, Arun. But what did you spend too much time on in the beginning?
Oh, that's a real good one. Pricing.
Okay.
We've only just landed on the pricing properly now. I actually, a couple of things. I wasted a lot of time doing pricing modeling and all that sort of stuff, and P&Ls. You can't do P&Ls at this at like seed range. You basically got high level numbers. You've got 100 grand, you go, I got 40 grand for this, 50 grand for that, 20 grand for this, and I got no money. So I tried to be too sophisticated initially, where and to be fair, one of the things we spend a lot of time on, which I'm still sort of working on now, is getting the shares correct and various things like that. That wasn't a waste of time, but I wish I spent more time on that one.
Yeah. And so that's a great question there is, how did you plan your cap table before going to investors? And I guess working out, the valuation in order to do so. And I know that was a bit of trial and error.
Yeah, the market dictates the valuation. Look, most pre-seed is honestly around $1 million.
Yeah.
That's the rule of thumb. That's basically everyone sort of went, right, 10 grand for 1%, that makes sense. Understanding the cap table is super important. Understand dilution, understand the effects of dilution, understand an ESOP. There's plenty of resources on Law Path Cake that just jump on YouTube, just got ESOP and that sort of stuff. It will help you out massively. That's the cap table. Try not to, like, being a solo founder. So I looked at my life. The way I looked at it was, I could have 100% of nothing, or I could have a smaller chunk. I'm not saying like 5%, but I'm saying like 30 or 40, 50% range by the time I've done all rounds of a lot. Yeah. So I went, well, that's the key. And then by doing that too, what you're doing is creating ownership with the people that are investing. And that's really, really important. Especially being a solo founder, you want to create ownership from the people that are actually investing. They say, we're a part of it. I've got one of my mates who he rings me once a week. Hey, what's going on with Empiraa? And he's part of it. He's owning it. And he loves it. He tells people about what he's doing. So you want to create that sort of buzz and that sort of buy-in that's greater than dollars. So you use your cap table for good, not evil. Yeah. But don't be stingy. Use it. Weaponize your equity. Yeah. That's probably the best way of putting it.
That's great advice. I've got a couple more questions before we wrap it up. I've got one here from Nabil. Good to see you, Nabil. I hope you're well. His question is, do you have a team or co-founder when you started raising? Or do you think this is a core requirement of investors?
No, it's actually a funny one this way, because I've seen people bring on co-founders like really late in the piece. Yeah. And I've never actually got it. I think, but everyone's thing is different, right? So like Canva brought on a co-founder pretty late in their piece with Cameron Adams. But that helped transform the business from what it was to what it is now. It's an interesting one. I really think it depends on your situation. It depends on your situation, your skill set, the type of investors you got. What I did instead is I decided early on I wanted to create a board. And I want to create a board of directors, someone that can hold me accountable as the founder, because that's the other part of it too. Like, people are trusting your money, so create some mechanisms, some governance around that, so to make sure that they're not paying you $100,000 and you end up on a current affair 2 years later. A tech startup love sheet that's you got like the people at current affair knocking on the door. So because when you get that money, you sit there and go, oh, this is sick. Yeah, it's not your money. It's the business money. Honestly, Nabil, there's a couple of different ways to look at it. It's going to come down to your situation. But I mean, for me, it worked really well to get directors, and I feel that's co-founding by committee. Yeah. This is a nice one from Michael. What was the best thing you learned from Sam or the team at Hyper? Be positive. Details matter. Sasha did some extraordinary pitch deck work with me, where he still apologizes for how brutal he was. But in saying that, that's great. Going back a step, if you're not willing to take on criticism and you're just going to get your guard up and go, stuff that I don't know what they're talking about, don't do this. Pull out, go back and work for someone else. You're going to get hot flaming arrows thrown at you at every step. So if you don't have the resilience or the maturity to handle that, don't bother. So you've got to learn. And I guess, from our point of view, working with you, Ash, as well, as we're a team together. We all succeed. If one of us succeeds in that way. So both are going to take the advice, work together, and every startup has its unique challenges. There's no textbook to saying do this, do that's going to work. So a lot of trial and error along the way. And to be fair, I know I've said this to people offline as well that have reached out. If I didn't do the Hyper thing, this is not a fluff piece. If I didn't do the Hyper thing, I wouldn't be where I'm at today because of the actual being able to sort of straighten the idea up and actually get it onto a train track rather than sort of having it derail. And I wouldn't be at this stage.
Yeah.
And I still don't consider this successful, but I
Yeah.
consider this is a step on the path.
Yeah.
I wouldn't be at this step right now.
Yeah, no, wonderful. Ash, thank you so much for your time to catch up today, mate.
That's all right.
It's a pleasure working with you.
Yeah.
Thank you to everyone as well who's come on board and been really engaging from an audience point of view. I'm sure Ash will love this, but if you do have any questions, just feel free to ping him a message on LinkedIn or reach out.
Like Empiraa on follow Empiraa on LinkedIn and feel free to reach out. I'm on there. It's pretty easy to find me, Ash Brown. So I don't mind, ask a question. Okay.
Awesome. And same as myself on LinkedIn as well. Always good to catch up, mate. And
all right,
all
Sam.
the best in the journey.
No worries.
Thanks.